right, welcome back. It's been a what more than month long hiatus for me. But I'm back. I'm back. I'm alive, uh, gratefully. But how have you guys been? How's it going, Dex? How's it going, Gil? Um, uh, we're gonna talk, Gil. We're gonna talk.
I just read Gil's comments about
We're gonna talk. We're gonna talk, Gil. Bacon, Dan, how you guys doing?
Oh, I was fine till I got sick like 4 days ago.
Dude, the crud is going around. I was out like last week, off and on. But yeah, it was like felt like crap. Got a little bit better, and felt like crap again.
So. I swore I got COVID because my wife got COVID 2 weeks ago. It was like a whole week, so I'm like, "Fuck, I got it," but I didn't get it. So I don't know. I think it was just food poisoning.
I was thinking it was COVID too, but I definitely just had some type of like cold sinus crap. I'm still kind of getting over it. Sinuses are still a little congested and whatnot, but you know what? Surviving. So
still went to the gym today though.
I didn't go to the gym, but I did some physical activity at my home gym. So it was good. It was good.
Did you do like a Rocky 4 montage because you live in the mountains?
Yeah, that's exactly what I do. I just run 3.5 miles to the top of the mountain, and I just go like this.
You lift sleds.
I look out on the view, and I'm like, yeah, and everybody looks at me like I'm crazy, and I'm like, it's okay.
Meat locker just punching like slabs of meat.
He's like, yeah, and there's like a group of kids on a field trip behind him, just like, what? Who is that monster?
Yes, exactly. Okay. So,
Gil, come on now. I saw his comment.
Yeah. Oh no.
You got it. Okay. You don't have to call someone the most brilliant investor in the world, but when they call something right, you have to recognize it. If we're going to make fun of the clownish picks, we have to accept that there are good picks sometimes on the internet. Like,
yeah.
That doesn't mean he's a good. I wouldn't be like, oh, he's the next Warren Buffett, but.
You know. Okay, so Gil, let's have a discussion. First off, oh boy, what's going on there? Dan. No, so the biggest thing that I was saying from the other live stream, Cal Mindset, shout out, Fabio, was that you basically said that like, SPY is basically the same as QQQ, which just is not factual at all, right? At all. So, I mean, SPY and QQQ have about 45% weighted overlap, right? But QQQ lacks tons of sector diversification that SPY has, right? So yeah, there are scenarios where, if we saw a prolonged, let's say, sector bear market in tech-related securities, that it would drastically lag SPY, right? Especially if we went into like a sector rotation scenario where we had longer term tailwinds in, say, industrials, financials, which probably isn't going to happen. But like there's a lot of sector weightings that QQQ is absolutely missing compared to SPY. So that's all I'm saying. Like, it's not as simple as like, just buy QQQ because it's basically the same as SPY, but it goes up more because that's kind of like a hindsight bias. And while I do recognize that the tailwinds behind the companies and the sectors that QQQ really targets could be better and better long term, it's not the same as like buying SPY versus buying QQQ is not, I would say, comparable from a portfolio diversification standpoint when you're looking at the actual index and what they hold. So I'm going to get off my soapbox, and there we go. Okay. And it's okay. Also, the comparative between VT to VTI and SPY to QQQ is totally different, right? Because you're talking about essentially VT, you're talking about international equities, right? SPY is still all American equities. You don't have any type of like international risk premium or risk discounts in SPY because it's all trading within, U.S. equity markets, which is going to be probably, I would say, the most well-received equity market. The biggest thing I don't like about VT, right, is not necessarily I think it's over diversified, but we're getting a little bit of feedback. I don't know. But anyway, the biggest thing I don't like about VT is that the international sectors that you're getting, you're getting diversification and exposure to more international revenue, but it's in international equity markets, which I don't think are treated as favorably to equity investors as U.S. equity markets, right? So some pretty big deviations there, right? Anyway,
I thought you were going to have him on, actually.
No, I'm just going to talk at him because I don't want to actually hear what he says. Like,
Oh no.
no. No, the main point was just that, like, the premise of QQQ being basically SPY is not correct at all. That's the main thing I want to get out there. All right. So, Dan, let's talk about your beloved stock that you love so much. I know this
Boeing
holds a very dear place in your heart.
Oh, you want me to say? I'll tell you about. Okay. How many people in capital mindset were like, Dan, Boeing's cheap at 200, man. Buy the dip. I'm gonna buy it. It's a cheap stock. It's value. I'm like, okay, you're wrong. Oh, cool. Do you understand how dyslexic that company is? We've only scratched the surface. And I knew there was multiple federal agencies looking at Boeing right now. I don't know. Maybe they missed that when they bought it. Whoever bought it. Like, you only scratch the surface on what I'm like, they're going to find more stuff. They will. And then and this is just the beginning of it. Now, if you want
Gil,
a perfect
I literally answered
the recovery of Boeing, you go right ahead. But good
Gil,
luck.
I literally answered it like right into the conversation. Okay. If we go through an equity sector market where the sectors that SPY has that QQQ does not have outperformance over the medium term, QQQ is going to drag drastically compared to the SPY. Dude, it's so simple, man. Like, oh my gosh.
No.
Right.
But
So
the other step.
that's it.
That the other company that Dan is not a fan of.
All right, Tesla boys. Tesla.
I'm enjoying this.
What? Me and Gil?
Like, watching the Tesla people online, same with the SoFi people.
Yeah.
The doubt is seeping into their souls. Maybe they're like, am I wrong? It's just going sideways for 2.5, 3 years. But here we are.
Oh, snap. We have a super chat. I still like you too, Gil, okay? Like, yeah, no. Like, we good, man. Echoes, shoot. Okay, we are going to get to this, Echoes. We will get to this, but we have to rag on Tesla for a bit. So,
Yes.
so we got to rag on Tesla. We got to try to keep on topic. So today, Tesla got downgraded.
Yes.
Did you read the downgrade? I didn't have a chance. But
I mean, I read the summarization, right? And okay, so do you want to give a precursor, or should I give a precursor of maybe my previous thoughts on Tesla? And I think we're kind of in alignment there on Tesla as far as like valuation and why we're not in it, but also like industry headwinds of like kind of where I see it going. So for a while, like, we've been talking a lot about pricing pressure, right, from additional competition, specifically BYD, and drastic amounts of margin compression as they try to grow vehicle deliveries in the lower cost sector of their market, right? So they're going from like a luxury brand into a more of like a, Toyota brand, right? Well, if they want to pump out millions of vehicles that cost $25,000 per vehicle, right? Your margins are going to drastically contract, and they're pretty much, like, my thesis has been that they're pretty much going to be fighting themselves. Like, their margins are going to be compressing for the sake of top line growth, and they don't really have a way out of that at what their margin levels were like a year and a half ago. And we've already seen them compress pretty drastically, right? Let's see. Margin compression, over from 2022 to now, we've had operating margins go from about 17% to about 9%, right? Gross margins have gone.
What I've seen, like you said, they came into the market as a premium, the premium electric vehicle, right? And they had to they made a decision. Are we going to maintain our we're going to just become the premium electric vehicle, and we're more concerned about maybe the margins and not the production volume, or are we just going to blast out as many cars as we can, build factories everywhere, and think we're going to just build 16 million cars by 2030 and maintain everything, and because we're Tesla. And that's what they did. And to people like Jesse and me, we're like, this is insanity. Like, I've never seen a company establish themselves in a certain, automotive companies establish a brand identity, and the ones that are successful stay there. That's why Toyota and Honda work, and that's why Mercedes, you can close your eyes and you think of what a Mercedes is. You don't even need the emblem. You can you see what it is. Just think you're going to just become a Toyota. That took decades of building quality vehicles and establishing that reputation. Same with like Ford F-150. You can't just replace that. And I think that was discounted by the people that bought Tesla too. They voluntarily self-destructed their brand. I don't know why. I don't know why they're doing this.
For the environment, bro.
They're trying to think maybe that they can just push everyone out of the way. But as they're, like you said, increasing volume, but lowering their margins, now like you're not a premium vehicle anymore. And now the quality is iffy anyways. So now China's like, well, shit, we can build cars cheaper, and we don't, if this is a price war, game on.
Yeah.
And
we were
like, they're not winning this battle. They're not winning this.
No. And the writing was on the wall with BYD for like the last year, right? You looked at the funding that BYD was getting from the government, or from, China's party or whatever, China's government, and the insane like aggressiveness that they were taking on their margins. I think they had like 2% net margins and like 6 or 7% gross. Like, it was like insanely cheap, right? So they're being hyper aggressive. And the only reason that I can see to really, if I was in China to buy a Tesla over at BYD, would be for like a status symbol thing. Like, and I don't think that Tesla is going to get mass market in China. I don't. I think BYD is going to continue to pressure them drastically. Mm-hmm. Now, it will be a good test of Tesla's brand power. And we'll see if Tesla just says, you know what, we're not going to play this race to the bottom game. We're gonna play the quality, like, you pay up for us, right? And that's a combination of the quality of the vehicle, but also the autonomous driving or the technological features that they offer, right? If I don't know, we'll see if those actually demand a higher premium. But man, BYD is gonna go full bore on them.
And you look at I looked at a video of a BYD car like a week ago. Someone posted it. It's like a traditional, nice looking car. It has a heads up display. Mm-hmm. It has a shift knob. It has everything that you want in a car and expect, right? Not this minimalist junk that doesn't appeal to mass amounts of people. I don't think. Like the new Tesla idea of nothing in the car but the screen. And by the way, so if the screen breaks, you can't drive the car. So there were people that got those cars, and then a month later the screen breaks. But in my car, if the screen breaks, I can keep driving it. Just don't have a radio. but like you can't use the car. Everything's in the, and like I keep thinking that that's gonna be a problem at some point for safety regulations, that the wipers and the turn signal, you have to look away from like the road. Like my car, I always can keep my eyes on the road, right? You have the stick.
Yep.
It's all right there. I wonder if that's going to be a safety issue with regulators at some point, having all of it there,
Yeah.
but you have to look away from the road. So I don't understand their logic behind that. And again, like the people that are fine with it, it's like, okay, well, are you like a tech savvy person? Because the average person, I'm sure, is not cool with not having a display in front that shows how fast they're going. Because that would drive me insane.
It would drive me insane too. I've heard that people get used to it, and you kind of like, you're just your motor muscle memory like gets used to just looking over the side and whatnot. But I feel like it would take me a while to be able to really like feel comfortable in that. But yeah, man, they so the short of it is that I think most of us have been saying, you know, based off the margin compression that they're going to go through, the probably the slowdown in vehicle sale growth and top line growth. Looking at a realistic multiple for a car manufacturer, right? Because their margins are freaking car manufacturer margins, right? They're going to compress into that level. Yeah, they have a lot of optionality with, you know, their clean energy, and they have a lot of optionality with potential, maybe recurring revenue from monetizing different features of the car. But at this point, like, you can't. I would not give them that type of premium because I don't think they've earned it yet, right? They still have to prove all that out. So
the only way it would make sense what they're doing is if, like you said, they started a subscription service for the cars, because then that would explain margin destruction, pump out as many as you can.
Yeah, absolutely.
But then the other problem, no manufacturer has ever been able to do that.
Yeah.
And who tried it? BMW tried, and they pulled it back within a year because of customer complaints. So there's no automotive market for subscriptions. So you'd have to create that. I don't think people would stand for it.
It would have to be a combination of like FSD plus some other, you know, really highly desirable features where they turn these into essentially recurring revenue models where they have a really, really high take rate on those type of monthly subscriptions. And then they push out as many vehicles as possible at competitive pricing to get as many people paying in maybe $100 a month on reoccurring subscriptions. And then that turns into a really, really interesting proposition, in my opinion. But
I have two realistic-ish ways out for Tesla, and it doesn't involve AI robotaxis or Optimus. That would be ad tier and Tesla Prime. So we have our subscription model.
Ads.
Or, and the other one also is Tesla apps. They have their own app store. They have their own land and expand. They have.
Yeah.
I don't know. I have solved all the problems.
I love that just like we just totally, like a year ago, it was all about FSD and robotaxi monetization.
Yep.
It was becoming a thing. And then that's like dead now. And now all they want to talk about is robots. Dude, and like no one's talking about that. How you guys just literally pivoted from one hope and dream to the next one. And no one had a problem. And no one's, hey, what happened to the robotaxis? Oh, no, we're about robots now.
Yeah.
Like,
no,
don't you think that's like, how did that pivot happen? And everyone
how
was
they
okay with
they pivoted multiple times, man.
Yeah.
It went from like sales growth, right? Top line growth to FSD to the monetization of FSD. And then it went to like, oh, Cybertruck is going to be awesome. And that's going to reinvigorate our sales, to Optimus. Like, it's just like one thing after another. Like, oh, well, maybe this will work. Maybe this will work. Yeah, it's rough. But like, so for the longest time, I think all of us have been saying, you know, like reasonable price for Tesla, sub 100 for sure, probably between the $60 to $80 mark is where I think it gets really intriguing.
Mhm.
And I know you've said right around 100 or sub 100 as well.
I mean, I'm not
The
valuing it at like Ford, Toyota levels because it does have. You have to
Oh, no,
factor in
they
there is the possibility of
deserve a
some of this
premium.
could work out, right?
Yeah,
Where
yeah.
so it's
They
you know,
deserve a premium,
yeah,
but
they definitely
not
deserve a premium. Yeah.
like a crazy, um, you know, tech
They don't
SaaS
deserve to be
premium or
higher than the
something.
market cap of every
Yeah.
other auto manufacturer in the world, like,
Yeah.
combined.
So, Wells Fargo downgraded them, and they moved their price target from 200 to 125.
Yep.
Um,
Thanks, sell side.
and they cited concerns with price cuts, potential EV delivery slowdowns, and further losses for the EV market share. Which price cuts are happening because they're having more competition in certain areas, especially in China. They're really their hands being forced there to really cut their prices down.
I'm concerned. I don't know if their tax benefits are going to stay if they keep dropping prices. I'm not an expert at their tax benefits, but
Yeah,
it's
I
quite a
don't.
lot. And I wonder dropping their prices on their vehicles if that's going to affect these credits they have.
I am way more interested in Tesla's energy solutions than their cars, way more, because the type
I
of
think that's where they should really. I think they
yeah,
got
like
a
and
great
their
opportunity for
margins are
that.
better. I think they have
Yeah.
like 50% gross margins on their battery packs, like their or are they called like megawatt pack or mega packs or mega packs, I think. But the margins on their energy business are way better. We're gonna have way more tailwinds in the energy sector as
Mhm.
grid demand increases. Um, I mean, I would shoot if I was
It's like
them, I
there
would
for
really
them.
push that.
Why are you even going to try and compete with like Nvidia
Yeah.
and Microsoft with AI? Even to think you can try and compete with them with like the Dojo stuff, it's just. Well, he called that a long shot, anyways.
Yeah.
Andrew, we're gonna talk cybersecurity here soon if you want to jump on.
And DC.
And DC. Yeah, we're doing it all. Doing it all. Yeah, so we'll see. We'll see what happens. Then we have Meet Kevin shorting.
Oh yeah.
Or saying that he was going to short. What did you think of his reasoning to short Tesla? I thought it was the stupidest reasoning I've probably ever heard.
I skimmed through the transcript, so not to unfairly
It was
bash the
macro,
guy,
right?
but yeah, like he talked a good amount of macro.
Kevin
He's
is
like,
great at just talking about bullshit macro
yeah,
to fill like
Yeah.
time because
Yeah.
he's learned that talking about stocks he doesn't understand is it can be pointed out how stupid he is, but he can just make up and just like talk about macro stuff and highlight charts and it makes him look smart.
Yep.
Like he's perfected this and I've seen him do it before. So it's just funny.
The crazy thing is, like, and I had to like check if the transcript bugged out on me, was like right around 10 minutes and 20-ish seconds or so, he mentions Williams Sonoma of all things. He's like, furniture companies like Williams Sonoma, PEG ratio of like 1.2-ish something. And I was like, what the hell?
Like I would be like, okay, what are the there? So he's like saying there's no problems with Tesla. Then it's all because of the Fed. It's interest rates. That's why.
Yeah. So his
Interest
entire thesis essentially was like, hey guys, sticky inflation, right? That's what the Fed is really going to pay attention to. Sticky inflation isn't continuing to trend down as cyclical inflation is continuing to trend down. So he's basically saying, I'm shorting Tesla because I think the Fed is going to be more hawkish than expected over the next like 2 to 3 quarters, right? So it's a complete play on the Fed going away from expectations. Let's add.
Oh, there he is with horrible lighting. Where are your bricks?
Oh man. Hey.
Dramatic entrance.
Man, that was a dramatic entrance.
So you got to create the template to move us to the other side. So then
Yeah.
when you pop up comments, it doesn't cover people.
How do I do that?
You can
I'll
just
do it
create new
later.
layouts eventually.
Yeah.
Oh, okay.
Should be at the
Oh, so
bottom.
Yeah.
gotcha.
Yeah.
Okay.
So
I'll do that later.
Fabio, are you gonna next show up like with like pyro in any of your
Maybe.
live streams?
Do you guys notice that I'm not yellow anymore?
No, you're not a brick either right now, sadly.
Yeah, it's because this camera, it comes with like a defect that if you don't download their software and just turn off certain settings completely, it's just fucked. Pardon my French. Yeah, so it's like it comes defective. But don't worry, Dan, they had a recall, software recall.
That's not a recall, man. You didn't have to bring it to some building.
Software recall.
Yeah, they created a software so that you could go in and just turn off certain settings so you could fix it. There's like
Perfect.
tutorials and everything.
Perfect.
But anyways,
So the summary, right, of me, Kevin, shorting Tesla or going short Tesla is all around the Fed, and the Fed keeping rates higher for longer. Okay, and in his little spiel is like, well, unemployment isn't that bad. Like the Fed isn't really going to care about unemployment ticking up a little bit because it's really not that bad. So like, sticky inflation is not coming down. It's not trending down, or it's not continuing to trend down with cyclical inflation. And he's basically betting on the Fed staying hawkish over the next couple quarters. What I thought was interesting because he said, "Oh, well, you know what? Unemployment isn't that bad, right?" And I don't keep up too much with unemployment, but I notice trends, I notice things going on, and I've kind of had this opinion that unemployment in a way can be a pretty deceptive metric when we're looking at it just from a percentage basis, because we really need to, or what I'm more interested is what sections of the economy are experiencing the biggest uptick in unemployment, and are we seeing a migration or a shift where maybe unemployment numbers are offset because we're having increased employment in lower paying jobs or lower paying industries, while we see higher paying industries contract and continue to lay off people, right? So that's kind of been my thoughts the last, I don't know, 6-9 months on it. So I pulled up the February employment report by the Bureau of Labor Statistics, and something that I found that was interesting. So it rose by 0.02 percentage points to 3.9 in February. But most of a couple notes was that most of the job gains occurred in healthcare, government, food services, drinking places. Okay. Social assistance, and in transportation and warehousing, right? So that's where we're having the biggest net job gains, right? And I'm really curious of where we're having the biggest net job losses, right? Because most of the contraction that we've seen over the last, 12 months, at least that has been in the news and that I've seen, has been, a lot of tech layoffs, right? We've got, Cisco is now going to be laying off another 5,000 employees. And it seemed like it was kind of the year for tech reining in a lot of the inefficient hiring that they did over the last, several years. So the interesting part, the second interesting thing that I saw was essentially that the let's see if I can find it. Major work groups. Don't really care about that. So among the unemployed, the number of permanent job losers, whatever, increased by 174,000 to 1.7 million in February. The number of people on temporary layoff didn't really change, right? So out of the unemployment data, we're seeing, if I'm reading this correctly, we're seeing most of the unemployment percentage increase in permanent job losses, right? Not temporary job losses. that's going to be a much bigger variation on the income side and the spending power of the people that are being laid off. Curious what thoughts you guys might have on that, if any.
I think that this is classic Kevin when just like making a harsh trade off of what he thinks the Fed's going to do. This reminds me so much. It should remind all of you of 2022 Kevin, his journey to go from 40 million to 20 million, from 20 million to 10 million. This is so him. And
Is he gonna buy another jet?
Nothing's frankly changed all too much. He is making a mistake that brand new investors make. He is a very famous Peru Saxena at this point. Yeah. So TSLA,
he's just making the same. Yeah, he has the same mistakes again and again. Like,
yeah, he hasn't changed a bit. Tesla, if you're into technicals, a lot of people would have said Tesla's been on a downtrend for quite some time. And the chart wasn't a good setup. But if you're into fundamentals, the setup wasn't good either. Definitely not the most interesting stock to make the largest position in one's portfolio. And I imagine he's feeling the pressure right now because his reputation is hanging on the balance of the performance of this stock. So to a large extent, he's shoved his whole brand behind it, and therefore a lot of his course sales are dependent on the success of this business. So,
you know what I think is interesting? Well, let's say he got lucky once already, right? He sold. Well, he got lucky going into the sale. Really dumb buying back in 2 months later or whatever. So he got lucky in 2022 when he sold before the major downtrend started, and then he bought in like 3 months later and basically continued to just ride the downtrend all the way down, right? So, and that's where a lot of that, 20 million in losses came from, going from 40 to 20. But it seems to me, my speculation is that he is using this like Fed thesis as an excuse to get out of something that he really doesn't like anymore, but he needs to present it in a way where his audience doesn't abandon him.
It's a good way.
So because I mean, is it just a coincidence that Wells Fargo downgrades them from 200 to 125, and then 5 hours later he releases this? I don't know. And with that being said, the other thing that I want to touch on is that, we are all kind of bearish Tesla valuation right now for totally different reasons. But you have to be wary about somebody making a bet like this, a call like this, because there's a chance, there's probably a good chance, in my opinion, that he looks like he's right, and probably for the wrong reasons. Right? He could, like the Fed could just do whatever they want to do, and Tesla's still going to be, doomed essentially. If like the overall thesis of margin compression, tightening, increase competition, and then re-rating on the valuation actually plays out, Tesla's going to go down. If he's short it, he might look good that he shorted while it's going down, but he shorted it for all of the right reasons, or for all of the wrong reasons, right? So it's not only are they right, but were they right for the right reason or the wrong reason? So far, he's been right for the wrong reason once, and I think he's going to be right for the wrong reason a second time. I think this is a major cover to kind of shield his audience, though, and get out of something that he's just kind of lost.
Did you guys already break down like where the CPI increase came from? So
we didn't go into the CPI. I haven't looked at the latest CPI, honestly. I don't look at that much. I know he was going off about sticky CPI versus cyclical CPI. I haven't really, I mean, the last time that I really looked at the CPI, I dug into it was several reports ago, and it's mostly coming from the housing and the weighting of how housing is calculated within the CPI.
No different this time, I can tell you that, except
Okay, it's the same.
But one thing in particular went a lot higher than the rest. Transportation services.
Blame Uber and
The
Lyft.
transportation services grew 9.9% year over year. And in the seasonally adjusted change from the preceding month, it grew 1.4%. Housing is continuing on the same trend, it seems. So it's growing about the same as it did in December, November. And, you know, we had I think we had a live stream where we, again, kind of told the audience about the effects of housing and the nuance of that. Energy also saw a bit of a bump all the way through, it seems. So energy prices are going up.
I may or may not have positioned myself for that.
Oh, you trying to brag?
No,
Trying to brag?
not a brag. Not a brag.
You trying to brag?
Not at all.
Huh?
Far too early to see if
You
this
want to
plays
flop
out.
on?
Still far too early to say.
Come on, Bacon, just flop it out there.
He'll
Yeah,
brag
swap
when he
it
gets
out.
this connects.
Put it on the table. What are you gonna say?
No, yeah, like there was an end of the year live stream that you and I both did, and you were able to like get me to somewhat predict, and I was like, yeah, you know what, maybe it'll work out.
Oh, let me share. I'm not sharing. Sorry, guys. So we got a huge uptick in transportation. Okay.
Yeah.
9.9 on a year-over-year basis, right?
I don't really see anything that's of concern because, like, we already talked about how shelter. I mean, the weighting on shelter is high, and shelters continue on the same trend.
Yep.
And if you actually look at rents, real rents, not this, it's not moving up as much as people think.
I mean,
hot
there was
markets are continuing, but
there was a good time where I was seeing rents move down. So I don't know. Like,
it's really
it's going to be,
dependent, but
yeah, it'll be very like location dependent. But there was a good amount of time where I was seeing at least apartment rental rates.
look at utilities.
Pull back.
Yep.
Utilities, pipe, gas service. There's been there.
Lower.
Gasoline, energy commodities. So yeah, a lot of inflation happening in energy.
Yep.
Food's really cooled off. By the way, I don't know if I told you guys this. This is wild. So you know how I told you guys Chipotle kept raising the prices, and I saw Chipotle a chicken bowl for the first time over $10?
Yes.
Oh my gosh.
It went back down.
Really?
I went back to Chipotle the other day, and it was 9 something.
Wait a second. Wait.
Deflation.
No. Hold on. Is this because Chipotle did surge pricing before Wendy's did?
No, because they have to actually change the sign.
Shout
Not a digital menu.
out to the Dan live stream where that got talked about.
Yeah. I'm not going to eat at Wendy's anymore, I'll tell you that.
Oof.
Well, I barely ate there, and now I think the times that I do eat there, when I do eat there, is not going to be the best times anyway. So.
Oh, they gave up on the surge pricing idea, I thought.
Oh, they did?
Oh, good. Okay.
That's hilarious.
Weak ass handed friggin' management there.
So do you guys know what transportation encompasses? Transportation services? Because I'm like, I mean, it wouldn't be like would it be gas?
No, it shouldn't be because gas is its own entry.
Oh yeah, jeez, duh. I'm trying to.
So,
are we talking like public transit, airline,
motor vehicle insurance, new vehicles?
Yep.
Okay. Well, we know the prices on Teslas aren't going up.
Oh, are they going down more?
Yeah, dude, they keep on. Yeah, that's what we talked. First off, they keep on cutting prices.
Wait.
trying to-
That's actually how they keep cutting prices on Teslas
Yeah.
Yeah.
and across the board on all models.
I think the last one was on the Y, or was it the 3?
The Cybertruck may be sticky.
So then I got to be honest with you guys. So like looking from a consumer perspective, if I'm buying an electric vehicle, what's the competition looking like from pricing?
Oh, I mean, are you an American one or a global one? Like
American.
ex-US? Okay, then
What are you trying to say about ex-US?
ex-US, I'm saying they may have access to BYD, and BYD
man.
may be a very compelling price for value prop. I mean,
I saw the reviews on BYD. Did you guys see the Car Wow guy?
I did not know.
I watched the one. I think you sent it, right?
Yeah.
Somebody. Yeah. Okay. Yeah, I saw that one. That was a good
Yeah.
review.
Yeah, and I think he was balanced, but his conclusion was that the BYD didn't drive as well.
Yeah,
Like, it
he
didn't-
liked the features, I think, in the layout of the BYD, but like he said, like the Tesla drove better. I get like the suspension feel.
Mhm.
Yeah,
But like the BYD was like a more standardized car.
it at
Yeah,
least
but-
it has like an actual whatchamacallit, heads up display.
Yeah.
Okay.
And a
Does
shift
does
knob,
the
window
BYD
wipers.
suspension like randomly just snap though?
Oh, very
Ooh,
true.
ooh.
What?
Yeah, that was like
Well,
a issue with Teslas. Like the
There's multiple
suspension, like, control
European
arms were
countries
just
investigating.
snapping.
Yeah.
Yeah.
I think it's Sweden and Germany are looking into it, I think. That suspensions would just break. So, and then the few that I saw, Tesla said that they looked at the data of the cars and they're like saying that it was the driver's fault, like for something. That was one of the videos I did.
All right. But I mean, it'd be interesting to like, I would want to dig more into what exactly transportation services is. If it's like vehicle costs, and then
I think
you know,
it's,
maybe
it's a component.
airfare, stuff like that,
Yeah,
public
yeah.
transit, ride share. I don't know. It would be interesting if it was. I can't really see. No, that's new vehicles. New vehicles. Used cars, trucks.
Yeah,
So
it's here. Here it says transportation services includes airline fares, bus tickets, train tickets, ride sharing services.
Mhm.
That makes sense.
And then vehicle insurance, is that separated out? Because that might be part of it.
Probably somewhere in there, but yeah.
I think that's included in transportation services then.
Should be.
I was gonna say my insurance, I think, just went up.
I just got
decent amount,
charged
too.
my insurance. My insurance went down.
Did it? Wow, that's a
Yeah.
miracle given where you're at.
My home insurance went down first time ever,
My home
like
insurance did
2 months
too.
ago. So
All right.
w-
So real quick, let's pivot. We got to get to. I mean, the guy paid me for crying out
Yes.
loud, so we got to get to this. and sorry, Fabio, your face is being blocked out by Echo's face, but
Yeah, you can just move me down.
Fabio is just speaking through Echoes. But
Bless you.
oh man, bless you, Echoes.
And
Bless
again.
you.
Jeez, that is violent.
Oh, so a couple stocks that have my interest right now. PANW is or Palo Alto is definitely one of them. It's been one that I've been staggering into and accumulating. I think I got up to about 4.5% position right now, just on my individual stock portfolio. We'll see what happens. You know, like, I mean, I have my own thesis around it and everything, but it could be a very interesting 1 year. I wouldn't be surprised if I got additional time and opportunity to add at equal or lower prices. Also, wouldn't be surprised if the market buys it up. I mean, I don't know. It's one of those that you know, I've watched for a while now, and I thought it was attractive enough to start a position in. But that's probably the one. Well, that, I mean, Arista Networks I'm still loving. But that's kind of gone up a decent amount too. Fleet Core is looking also very interesting to me. There's a number of names out there that I think are pretty interesting across different themes. Cybersecurity, definitely trying to build that out as I get opportunities. But really, the only two cybersecurity companies that I would be considering for long-term positions are Palo Alto and CrowdStrike. But CrowdStrike, I just don't see them being a decent value area. I think there's a lot of risk as far as the valuation buying them at current levels. I think Palo Alto is potentially going to give us a decent opportunity to stagger into them. But
Jesse, you've changed, and I don't like it. Where's the trash panda, Jesse? The one that would find
it's
really
hard,
ugly,
man.
gnarly.
It's hard. There's that side of me still. But I have, I've been doing some trash panda acquiring as well, right? Like I built out Paycom and Paylocity, and those have turned into decent sized positions, and I'm up on both of them.
Be worried about Paycom. They got the Paul Gabriel kiss of death.
Yeah.
You
know what? He's only probably got like 0.02% allocation, so. Everybody's going to be
got lower.
Huh?
Paycom's lower now.
I mean, I think it's like what, 185, something like that.
188. Yeah. No, because I got rid of it around like 200 something. Then we did the Paylocity buy.
Yeah, I didn't do the reallocation. I just bought more Paylocity. Kept my Paycom allocation. I think my Paycom cost base is right around 180. Paylocity, I think, is like 150 or something like that.
I forgot Paycom has a dividend.
Yeah, and I think their buyback.
There's a buyback.
Their buybacks are pretty good too, I think, if I remember correctly.
Well.
Yeah, I mean, they're trading like historically, like they're trading at super low multiples. And let's go to the free cash flow. Where's that? If I could see.
Yeah, they have been. Wow.
Yeah, look at that. Look at that repurchase right there.
But it's most recently, right? More recent that they.
Yeah, but you know what I like about that? They're buying back at a decent valuation.
Yeah, right here looks nice because forward.
Yeah, they bought back. It was like 2% of the float in one quarter.
Wow.
So
this way.
That was something that meant. I mean, it ended up not being a straight 2% because they also have SBC. So I think it ended up being like 1.3 or 1.4.
Andrew might be in here? Question mark.
I've been in here for like 5 minutes.
What? What do you mean?
Yeah, I just take a look at the private chat in the StreamYard and I'm like, the hell?
I never saw you.
I'll be right back.
I had my camera off.
Oh, that's why. So it didn't pop up on my my little bar down here.
Yeah.
So
can I just circle back to one topic, and then we can?
Yeah.
I feel like it makes complete sense that Meet Kevin's selling or going short Tesla because he's like best friends with Ross Gerber.
Oh.
And Ross Gerber's like super bearish Tesla now.
Oh, okay.
And then on the last earnings call, Elon Musk said it's really simple. Like he literally said, it's really simple. If interest rates stay high, we have a bad year. If they go lower, we have a good year.
Yeah.
So makes sense to me.
Okay. Oh man.
But
So,
what were you saying? But what happened though is that when I saw the Griff money, I needed to get in on it, so I was like, let me hop on.
oh, okay.
You guys going through the stocks you're all buying?
Yeah, we kind of just started that. I shouted out Palo Alto, Arista Networks, and FleetCor. But I mean, there's also, man, VRT, I might, I nibbled on that, but I might.
Fleet Core,
increase-
I rushed into that one. If you guys saw the allocation increase,
It was
Yeah.
a
it
good
was
rush.
pretty fast.
You're like a freshman in college. You like rushed right in. It was a good idea.
Yeah, I was like, I'm gonna free think Andrew. No, but also when it was explained to me when you guys when we were having that discussion about trucking this
Yeah.
year might show an improvement,
Mm-hmm.
I was
Yeah.
thinking to myself, well, their guidance might be uplifted faster than we can all think, and that sell off, that recent sell off, was like, oh, this might be my
Yep.
opportunity. Here you go, boom, gave it the capital, and now I'm just sitting and waiting. That was what I did with ACIC back in the day. What'd you say?
The Echoes
Huh?
is going to hate my stock picks.
So Jesse was Palo Alto and payroll stocks.
No, it was mostly Palo Alto. Yeah.
Palo Alto looks really interesting for me to get back in. If I buy right now, it's just actually only a couple dollars below when I sold to buy Fleet Core.
Man,
Now FleetCore's been up, and you can sell that. FleetCore will down again.
Just keep trading. Just keep trading.
Just trade.
Yeah.
I mean, you could buy back in even Paylocity. They've just like gone nowhere. You could trade that.
Yeah.
Well, right now I have my short buck spread
Oh Lord.
that I owe about $10,000 by the end of the month. So
Indebted.
this is a dark path.
We have lost
man.
Fabio.
This is why I would keep posting the meme of like Padme going like, Anakin, you're going down a path I cannot follow.
Well, it's true. I can't follow that. I saw the box spread stuff and I was like, yeah, this is too complex.
I do think the payroll stocks are still pretty intriguing.
Mhm.
Even like Paycom around here and Paylocity. And they're not really my focus because I already have those allocations built out, but those still interest me.
I have a question for you, Jesse.
Yeah.
What are your thoughts on, with the payroll companies, the discussion that we had a while ago about them potentially being commoditized? You must not think that they're not that commoditized.
Yeah, I don't think that's gonna necessarily happen.
Okay.
I really don't. I still think I don't know. I kind of hold the same thoughts that I had, where I think as we got into an environment where companies were more strict about their spend, especially on switching costs and switching effort, that was going to really slow down the rate at which and the willingness at which companies were wanting to switch HCMs. And most likely one of the biggest reasons that they would switch was for, I would say, like a lower quality, cheaper solution, because they're feeling the pressure from the macro environment hitting them. But I still think that once this recovers, we probably see a return to the higher quality players.
I just got mind blown by something.
What's
What?
that?
Oh my gosh. I can't believe I haven't seen it sooner. Okay.
And also, like, there's going to be a huge drag for HCMs if we go through increase in unemployment. So,
And you mentioned, interest rates yet, right?
Interest rates
Being higher for longer. That's a
Yeah.
benefit to them.
Yes. So it's so interesting because the HCMs, it's like a catch-22 on the interest rates, right? Because they're going to earn the interest off of the capital they have that they're holding for all of the various companies that they're servicing, right? So if interest rates stay higher for longer, it's going to actually increase. They're going to beat, essentially. They will beat.
Yeah.
If we have interest rates that are at 5% for the next 3 years, or for the next year, they're going to beat their 1 year guidance, because I think not Paycor, but Paycom was, I think, guiding in 3 or 4 drops and potentially up to 7 drops. But at the same time, it's interest rates dropping, even though that would hurt their interest income, it might affect their relative valuation, which could lift them. So I'm super torn on like how the market would react in each scenario.
I gotta tell
But
you
yeah.
what mind blown me after we finish the ACMs, because
Just so you,
free cash flow projection.
Paylocity didn't bake in any. They only baked in 25% cut, or a 0.1 cut in their guidance for interest rates.
Yeah, Paylocity did.
Yeah, Paycom may have been more.
Paycom was way more.
Okay.
So
Paycom was like, I think, a 50 or 75.
But
basis point
Paycom
cut.
gets less interest income than
Yes.
Paylocity.
Yeah.
So you didn't realize that? Well, maybe you just hadn't thought about it. That it was beneficial for them.
It just keeps going. All right. Anyways, I'm looking at the projections for Paycom sell side estimates and free cash flow. So it's 297 million for the end of this year, and then 366 million for next year, followed by 526 million in December 2026.
Yeah. And I think they're guiding, were they guiding like 9% growth, I think, for this year?
If I calculate, what their guidance is, I don't have that in front of me.
Yeah, I think their guidance was 9% or something like that. So
the one thing, just to interject here, because I will forget to mention it, that I was mind blown about, because what Dex said right there, guys, the cult we were going to start, that we still have a chance to start, the blockheads. Everything is a block. Everything is a block. The box is all that matters.
The box is
the block. The box. The box is a piece of the block.
I don't know if the box is a Freudian slip or if we're just.
Blockheads unite. I'm gonna go buy like a cardboard box and then just like put it over my head and do videos and just like have like a head flip, like welcome back to blockheads.
You gotta get the one like the guy from Party Rock Anthem.
Yeah,
you see the music video. He's got like the big.
Yeah.
That's how you know we're millennials. Well, I guess
all is block. Block is all.
You want to see Fabio get really upset?
What?
I had Arby's for dinner tonight.
That's fine, but don't pretend that it's as good as Chick-fil-A.
I was going to say, did you rank it higher than Chick-fil-A?
I do rank it higher personally than Chick-fil-A, but that's. I don't remember the last time. I don't remember the last.
To be wrong.
You're being so nice tonight. This is the nice Fabio.
Nice Fabio.
You're allowed to just be wrong. Sorry.
I guess I should. Well, so the only two things I'm buying right now is AgCo, and I might buy more of my cabinet company.
Nice.
What's the cabinet company ticker, so I can pump your
Master
bag?
Brands.
Master Brands.
It ran up real fast on me, and they're executing faster than I thought. So I'm not sure. I want to buy more Agco though. I think that's probably the current one I want to buy more of, because if they can execute on what they said with their Trimble acquisition, which isn't been gone, it's not finalized yet, so it's going to be finalized soon. If that works out the way that Agco is saying, it's not a very long shot for them to get up to John Deere valuations. So they're not even at John Deere margins. They don't have to get better than John Deere. And at that point, it's like, I mean, it's like a $200 stock, I think. But I'm spending my time researching design engineering firms. So I'm not sitting on one thing. But
So I'm looking at this cabinet company. My gosh, it's like you have. I go onto their website. You know, you have this like blue collar man just smiling at you with a mustache. He looks so happy.
I think if you're gonna get a home, I guess I wish Lennar's tomorrow. They only did their press release today on their home estimates, but I don't necessarily like the home builder investment. I think it would have been better to have something that has remodeling in it. Which is why I like the cabinet company. You want, because I think if the Fed doesn't lower rates, which would spur housing, I want something that also has not just new home investment, but also remodeling and wholesaling. So if people want to look for like a supplier, I think that's your better shot, because people are going to have to, I mean, you benefit in any environment. Like if the rates come down, people maybe have to remodel a kitchen before they move, or they buy a new house and they use a construction loan to remodel. And then you also get the Lennars and so forth that are building, which I think their initial numbers are better, but not that much better. I think they said 80,000 homes compared to 73 last year, Lennar. So there's my long answer.
Nice. Fabio, what about you? Or
either or.
Well, recently my purchases have been VRT, PWR. On my short list of potential buys at some point is included Warner Brothers Discovery. Shout out to all of you out there. Potentially, we can talk about it if you want.
You jerk.
Why?
We'll talk about it later, maybe.
We'll talk about it later. And I've been actually hoping to buy more TSM.
Yeah.
I want to get a good amount more shares potentially. And if I had any room left after that, maybe the box spread can grace me with more capital.
Oh, Fabio, I got news for you. Disney's gone.
Wait, whoa, really?
Breaking news.
Ooh.
Yeah.
That's a win.
Did he leave?
Oh yeah, he just left.
Yeah, he's out, man.
He left out of
We're dead to him. We lost Fabio. Dead to him.
We got to bring we got to get Andrew back on the comments block the whole time.
Andrew.
Oh no, I'm good. I'm just. Oh, now. Oh, Fabio's not been demoted.
No, Fabio's
pit of shame.
You ready to apologize?
Huh?
Damn.
Dude, no one has to apologize. You're in the pit of shame. No one has to apologize to you. Okay.
Listen. How many times have you sold Disney in the time I held it? You sold it like 4 times.
I sold it once.
How dare Listen, I just don't want to. I don't want to be there for the Nelson Peltz shareholder thing coming in a month.
Yeah,
and it's above $100. So
no, because I
got to see Fabio's shame. I can't see him.
Yeah, for some of the lives that we collabed on, you made it very clear. So I get it.
I've said from the start it was a trade.
Yeah,
buying Boeing.
So don't shame me because I don't say everything's long term. Okay, Fabio's gonna buy everything I say not to buy. I'm telling you. He's gonna buy Boeing. He's gonna buy Warner Brothers. What else?
Tesla.
Yeah, he's gonna
yield next.
No, he won't do that. No.
I'm gonna make an ETF. I'm gonna make an ETF. Boeing, Tesla,
yield next.
Warner Bros. Discovery.
PayPal. PayPal was the other one.
PayPal, I gotta get some growth in there. So PayPal.
Growth.
The Dan hate portfolio.
Yeah.
Yeah, the Dan Hake portfolio.
They did-
See what this is. All the yield max funds.
Oh, SoFi.
So
Oh yeah, yeah. That's
gotta
the
have financial exposure. Yeah. But anyways, see, all seriousness. Okay, so you sold Disney. All right. You bought Agco. John Deere though, is John Deere expensive right now?
Historically, it is kind of expensive right now.
Really? What's the multiple John Deere typically trades at?
Oh, I think so. I don't
Right now, I
follow
see a forward
John Deere
multiple.
now.
If these numbers, man, it basically went down
Dude.
and then it's bounced up since its fall. It's like just climbing back up. Like, what is this?
winners
This is
don't
annoying.
lose for that long.
Guys, do you know who reported today?
Who?
And they tanked after hours?
Who?
Wait, by that laugh, like what is it? Jeremy stuff?
No, it's the one all the dumb fucks on Instagram think, or not Instagram, on Twitter thinks is the next CrowdStrike.
Dude, did you
Sentinel?
not see that?
No,
Oh,
Oh my
was it
god, yeah.
Sentinel?
They're down like 12, 13% after hours.
yeah, people are like disappointing results. Yeah, you dumb fucks, because you don't understand cyber. And you're like, oh, it's the same thing, basically. This is CrowdStrike 5 years ago. Okay, Antonio Linares, you idiot.
There goes the moving bus.
Oh man.
Oh man. I just think it's so sorry. I just derailed everything. Fabio, you're on a rant. I'm sorry. I
No,
get
it
so
wasn't
much
a rant.
joy out of people
No,
doing
Fabio doesn't matter. Andrew, what are you buying?
Not Sentinel One.
You-
If I, sorry, go ahead.
No, I only had a question about John Deere.
Oh,
I mean,
the multiples.
I'm trying to look historic. Well,
it's. I mean, on a historical basis, it's trading kind of maybe a little bit cheap.
LTM
Across the
basis or
board.
forward.
But that's all. It's all LTM.
Nah.
I don't know what forward projections are.
It's okay.
Are they like expecting a pullback, Dan?
I don't really follow John Deere that closely. So
Like I'm just a hodler. Or do you own Deere?
I'm out of it now.
Oh, okay.
I used to have it, but I'm like I might as well pick them or Agco because they're gonna fight each other. So
And you chose Agco. So do you pick Agco because you think they have just more room to improve? And they
yeah,
traded
I like their plan. I think the Trimble acquisition has potential. And I like how their growth, I like how they're starting from Europe, moving west, which I think is going to help them with environmental standards. So Latin America is kind of a toss up between both of them. They both say they want to be in Latin America.
I think markets just like they had multiple contraction. It looks like both of them did, depending on what metric you're looking at. So it looks like the market's not buying that run up from COVID. It's not buying it staying at all.
Yeah.
So I'm looking at the multiples going back for like 20 years. Looks like both of them are below their historical levels. So I don't know. I think just like market, is it scared that so much demand was pulled forward and then maybe it's wrong? They're both trading at a low multiple. I mean, Agco is trading at way lower multiple than John Deere. DE is what? At a blended PE of 11.8. Looks like. Wait, sorry. Let me go to diluted earnings. Yeah, 11.86 diluted earnings.
Yeah.
And then Agco was like 7.78. or 7.74 actually. On a forward basis, for whatever reason, this source is saying the forward PE for AGCO is 8.71.
Winner?
Still low.
That's about what I see. Yeah.
Yeah, that's low. And then the peg to gap is 0.23. Wild.
Yeah. So I took, they have the margins of their software business they're going to acquire. I did like a blended valuation with what they have now.
Mhm.
And then I was just like, well, what does it take to get to like a John Deere valuation? And then I'm like, okay.
And is there okay? What's their
Worth a shot.
They're paying out a massive dividend.
They are, or that's special dividend?
It's a bit deceptive though.
Was it a special?
They pay a small quarterly and then they do a variable rate special dividend, depending on what they're going to do with the capital. Management makes a decision.
I love that.
Yeah, they
nice.
started that a few years ago. I really a fan of that. Packer does the same thing. So I'd like to see more industrials do that, but I don't know if investors would appreciate it.
I appreciate it.
It makes sense though, because they can, if they have something that would be good for a return on investment, they can pursue that, and then they can just tell investors why they're reducing the special dividend. But then they can still show aggressive growth of a smaller quarterly.
Yeah. Yeah, because like, do we all want, like, if you're dividend focused, do you want everything to be like a Walgreens Boots Alliance, where like dividend has to be called into depth in question and then gets crushed? Like, come on.
What I gotta say to you, Bacon, is I timed the top on Costco.
For now, you still have at least 8 Costco shares payable.
I'm basically short Costco.
You're basically short Costco.
You know what I am interested in though, kind of like the new. There's a new CEO that's coming in for 3M. So after this, I want to see. So it popped a little bit. So there is a scenario like just like Disney, right? I have like criteria for what I want to see with 3M that could put it on the interest line. So I'm curious if he's going to say anything. Like, I don't know yet, but they did announce a new leadership team.
Did you take a look at their spinoff? What they're doing? Dan, it's really interesting what they're doing.
I'll look into it more now, because like without new management, I really didn't care what they were doing. But if they have someone new coming in, I'm curious. So
can I spoil it too?
Go ahead.
They're basically grabbing, so the Spinco with these medical brands, they're basically grabbing all of their debt, not all of it, but most of it, and they're just like, here you go.
Oh, that's good.
Yeah. So the RemainCo is gonna have a pretty clean balance sheet. We're talking just $5 billion in debt, with about $5 billion in cash.
I'd say if they devoted to organic, like new products, and cutting some of their older products that don't make as much money, like Procter and Gamble, if they followed that model, man, I'm in. Like, big
Did
time.
you see Jesse's face when I said that? He couldn't help it. The trash panda came in. He like literally almost fell like into the camera. He's like,
yeah, I was.
But this is more like we're
that's
not
hilarious though. They're like, yeah,
fight.
we're kind of screwed, so we're just gonna spin off. We're gonna split, and you're gonna be the sacrificial lamb and die.
To give everyone
and
context,
then this part is gonna be the prodigal son.
They had $13 billion in debt, and they're basically going, 13, 8's gonna go here. We're gonna keep 5, and we're gonna give you $800 million in cash.
Not bad.
Of our $5.9 billion in cash. So we'll have $5 billion in cash, $5 billion in debt. And then it's just a question of litigation. And I think that's again going to be like master limit settlement.
Okay, that's what I was wondering. Is the spin-off co that's taking all the debt load also going to have the liability of the? Okay.
No, because that's in the.
Johnson & Johnson showed you can't. The liability
that would feel illegal.
It is. There's a 5-year clawback period generally. So like,
okay,
like if you spun off of a company, even if it, like that company was the one that made all the products and they were the one that took on the litigation, if they lost litigation and there was an additional amount needed, they would easily be able to call that out of the original co.
Yep.
Like, I
In
try
my
to get
line
out
of work,
and they
I know a
bring
lot
me
about
back in.
spin-offs and legal litigation in regards
Oh.
to these things. So
The new CEO is an L3 Harris guy.
Oh, that's interesting.
Andrew, you have to buy now.
okay, I'm going all in.
Dude, 3M, you'd be locking in a 6% dividend. They've been buying back shares. So did you guys see that?
Well, that's why I buy 3M, because I'm all about that cash flow.
Why you overcomplicate these things?
Low.
It's not hard. Free money. Get that
Cash
free money.
low.
Yeah.
You put it in your pocket. Seems real. You only have one pocket. It doesn't move.
So,
Oh my gosh.
did everybody answer Echoes' question? Question mark.
Thank you, Echoes.
No, I didn't.
Thank you, Echoes. Yeah, there we
yeah,
go.
we need
The other
Andrew.
Real
And
value.
we need
now?
bacon.
Additional value. No, we don't need.
No, we don't. Bacon's buying Crocs.
No, I'm not. Not right now.
All the time. No.
Not right now.
What am I? Well,
Time. You're buying time.
all right, now I'm buying time.
While he thinks about that, I will say that I'm being like, I still feel like I'm being a little bit cautious. Just because a lot of the things that I think have really good tailwinds, it's just like, how long are those tailwinds going to last? And it gives me a little bit of pause, but like at the same time, you know what, I do want a little bit of exposure. So things like Arista Networks averaging up on that, and Palo Alto trying to stagger into it. I'm still just kind of like, nothing's like at insane deals right now, but I really feel like I would not be surprised if the market overall had some clean sailing for a bit, just because of the ridiculous Capex cycles that some of these tech companies are going to be going through.
You want to hear a company that I'm very much considering buying?
Fire away.
Large cap tech.
Uh-oh. Fire away.
Meta.
Nvidia.
Meta.
Oh, Meta. He's
Meta.
Please tell me why. Tell me why I'm gonna get even richer.
Yeah, please.
It's still not expensive, first of all. Like, it's at market multiples right now. Because what's the S&P at 20 in 23, and it's at 24 on a forward basis.
Yeah.
And what's sell side baking in terms of growth this year? They're saying 17% this year. I don't remember what management guidance. Let me see. I can pull up guidance right here. Oh, that's a terrible. They gave guidance. You're giving me guidance on effective tax rate, and that's all. Like, what the fuck?
Meat.
Meat.
Not meat. Meta.
So think about, first of all, they're already not expensive. They are gaining market share in the ad market. With all this noise going around TikTok US, I feel like TikTok will continue to lose advertisers. And because one is like, if I do a deal with TikTok, what happens if all this ad dollars I put into it, all of a sudden it gets messed up, it gets acquired by someone else, and now it's not nearly, like, the algorithms are all messed up now because they don't have all that other macro data to put into their system. We can talk about WhatsApp, where WhatsApp is like still, I don't really think fully monetized. It's just getting ramped up.
Yeah.
And I will say I wasn't really a fan of their AI, but I don't see an unreasonable expectation to see like high teens earnings per share growth for the next 4 to 5 years. And I think I talked about this before. There is a portfolio management thing that I look at where it says, on my individual stocks, am I underexposed to big tech? And what's the risk of being underexposed to big tech? Like, this is kind of like, and I don't know if that's more of like a macro, like philosophical question, like how, because I used to have about equal weight to big tech. It was concentrated into like mostly 2 shares or 2 positions. But now I'm looking at it and saying, okay, well, I sold off one of the positions a lot. Now I'm underweight big tech. I could just look at choosing other players, not worry about that. Or I could say this company looks good and it gets me back to being in line with the S&P in terms of that exposure. Because historically, if you aren't, I mean, like by historically, I mean like the last 10 years, if you're underweight the top end of the S&P 500, it's like good luck. And that doesn't mean go buy one blindly, but like Meta looks good.
Yeah.
You know, they're making well, you look around at all big tech, it's just like hilarious to also see their cash hoards. They're making as much income as the entire income of whole companies.
Yes.
They're what? Their quarters there?
They're making enough as much interest income as the entire net income of many companies.
I mean, come on, it's like a dragon's chest, war chest right there.
It's insane. Like the biggest example here, I think, is Google. If I go to Google's income statement, it's just like,
I don't like that actually.
yeah.
I mean, like there is nuance though, because they are international. I want to say what the double Dutch, double Irish loophole thing got closed, but like there's probably still like a fair amount of cash that has to be stuck somewhere. Like
I'm sure. I just think like most time for businesses, I hope you have places to put your cash that get you better than a 5% return.
Oh, okay, that is fair. But yeah, great answer. So I think Echo's got his money's worth. Thanks, Echoes.
Yeah, thank you, man. Support.
I tell you what I'd love to buy more of, though. It's Curtis Wright.
Ooh.
Like if I just like,
dude, we
don't care about price, man. That thing has been such a friggin' rocket.
And
I don't think it's gonna slow down.
You just need to equalate Curtis Wright and BWXT and just like chill. That's what I would do.
Yeah. Well, it does the BWX. Do they sell like parts to like reactors, just like on the market?
I know they do repairs to nuclear, but they're also the main. They're like, I think they're almost fully exposed to just nuclear submarines. Like they do like, dude, look at their, oh my gosh.
But like the thesis for those 2 companies, like it's literally like the rest of our lives, the build out of that submarine force.
Right.
Like if you want like sleep at night stocks.
Oh man.
I'll be interested to go when the DoD budget comes out, like just read the language about like the priorities is what I look for, not the money necessarily, but as long as it keeps saying priorities, China, which I think it will be.
Dude, these companies on a 5-year chart, it's like they have almost the exact same return. Curtis Wright's like slightly outperforming. And you can see though, like in the last year, BWXT was like, wait, we're like the same thing. They caught up.
Yeah, I see that. Yeah.
Sam, if I'll pump the pegs on IAS. If Meta does well, IAS should do well.
Yeah.
Okay, a little bit of pushback. Don't they have huge exposure to TikTok though?
Boo.
Yes. I don't know.
Whoa.
They do have big exposure to TikTok, but their primary growth driver moving forward.
Bill, you clicked it twice.
Whoa.
Man, I got a double bump.
Gil, how come I never get the love like this?
Thank you, my man.
Like $2.
Hey, apparently you just don't live stream for a month and then come back and
I need to like talk trash about QQQ, I guess. Get some money from
yeah. Nah.
No, TikTok US would be the one that's I'm primarily worried about, and IAS is more on TikTok International. But like their primary growth driver and what they're I think that them getting on Reels and doing their measurement on that is going to be
huge.
Massive for them.
Like the value proposition that I see of their product on Facebook's and even YouTube's short form content is huge.
Mhm.
I think they're going to see. I would not be surprised if they saw much quicker adoption as long as they're marketing and selling correctly to the ad audience that is using Meta. Jesus.
Oh dear God! Oh dear God! The rules of the streamer.
What in the world?
Things must be shared.
Okay, so all right. Thanks,
This was done
Gil.
twice.
Echoes your voice.
Thanks
Wait, was it
again,
twice
Gil.
or was it 3 times?
It was
Oh, then he
twice.
did. Wait,
And then
what?
Echoes. Thank you again. What?
wait. I'm seeing. Oh, it went away. Okay.
Yeah.
And then
Maybe just StreamYard, but
Yeah.
and then of course.
thank you as well.
Oh jeez, stirring the
Jesus.
pot.
Jesus.
So many pots.
Thank you guys.
So
Thank
much
you.
stirring.
Keep going. Keep going.
All right. Yeah. Go. No. Sorry.
5
okay,
more
back-
bucks. Jesse takes his shirt
back-
off. No kidding.
Wait, but it's a
Okay, continue. Sorry.
Welcome to Only Stonks today.
Only stonks.
Dude, I get all these ads.
Why is there
now
not a
that you
channel
mention
named
that.
that, dude?
I get all these OnlyFans ads, and it's like a cooking show.
And
And
then-
I'm like, wait a
wait,
minute.
I'm waiting. I'm waiting for his 13x filing.
Oh my god.
Bruh.
I'm changing the name of my channel right now.
Only
Only
Stonks.
Only stonks. I need a logo though.
You
but,
could easily
okay,
take
anyway.
an O F and turn it to an S.
Yeah.
Oh my god.
Oh my gosh. Oh my gosh. Okay. Okay. But yeah, IAS super interesting. I mean, I established a position in that one really recently too, and I think I'm around break even on it. I was kind of hoping for 8s, just because I think like so much of it is de-risked around that $8 mark. But yeah, I think, I mean, IAS, if oh man, I think demand on Meta's platform for using their products on the short form content, I see really good use cases for that. I would not be surprised if they're able to sell it quicker and faster than what they're projecting. If they do, then we essentially got the opportunity of a lifetime with this recent pullback.
Right. But if they
But
don't,
at the same, if they don't, I mean, it's going to be highly volatile to the downside.
right.
But
you have
more super
downside
chat.
risk.
yeah.
Yep.
So
Another.
it's definitely one that you with it being such a
Oh
kind
dear
of
God.
small.
There's 2 more.
There's
Okay.
2 more.
What is
yeah.
going on?
DJ
Yo,
Khaled.
I'm getting my
Guys are
royalty
crazy.
check, right?
All right, we're gonna
Yeah.
end. We're gonna go to my stream now. We're gonna keep going.
We're going, boys. Oh my gosh, yeah, I gotta put you guys on retainer or something.
Echoes betrayed. So Echoes betrayed Gil. And joining
Scott.
Then I will destroy you, Echoes, for betraying me and joining Scott.
Yeah, he so betrayed you.
Oh dear God.
Oh my goodness.
Jesse,
It's
I'm
time
sorry.
to take the
I
shirt
don't know
off.
why I suggested this. I didn't think they would do it. I should have made the threshold $50.
Oh my gosh. Oh Lord.
Yeah.
I'll take the sweatshirt off. There we go.
$100 more, and Andrew
Oh,
takes
no.
off his shoes.
That's right.
Oh,
Oh.
an entry for Wiki Feet.
I'm
No, we
sweatshirt
wouldn't
like
even
that.
know. He'd just take off his shoes, and we wouldn't know. He's filming his
Oh my
face.
gosh.
I'm over here. I'm unlacing right now.
Oh dear God.
All right, guys. $50 more.
For
dollars,
$100,
and he's juice.
somebody will chug a beer out of their shoe.
Oh no.
Oh,
Blech.
And
you
for
guys are making me
$1,000
want
bucks,
to get
we'll
into
do a butt
that
chug.
milk. I could get a beer right now.
Oh my god.
Where's my
You
whiskey?
guys.
The
My
madness.
whiskey's downstairs.
The madness.
Yeah. Jesse gonna be able to buy 1 share of ANET from this dono.
You guys make me want to buy Google again. Stop.
Damn, Jesse's gonna get
Dude,
his
I
first
told you,
for me.
YouTube, man.
No, I
YouTube.
know. Dude.
Come on, you see that revenue? That revenue.
Yeah, they're getting like 35% of all that, right?
I have no idea. I guess I'll
I-
find out.
I don't know either, but yeah, like that's the low end is my guess.
You're helping me and you're helping my Google stock, so thank you. Thank you.
Oh God.
Man. All right. Anyway, yeah. IAS, interesting. Definitely on the higher risk spectrum.
Yep.
Yeah, I'll
but
pass on.
yeah, they could they could
Only
do
pick
pretty well.
winners, Jesse.
Hey, dude. I
I see what you did there.
To answer
I see
Fuhad's
what-
question, definitely.
Oh.
but
Oh, yeah. I get that.
I feel
By the way,
nervous.
did you guys-
I'm
did you
4
guys
for
hear-
4 on internet stocks I've pushed, so I'm like, I'm gonna fuck up at some point.
Did you
I
hear
keep-
what? Did you guys hear what Alex Karp said today?
No.
What
What
did
did Carp Man say?
He said something like the guys that short Palantir are just like coke addicted, like nut jobs. He said this on CNBC.
What?
And he's like, I'm gonna like, let me see, I can find it.
I'm
I
sorry.
just saw unrelated Double Verified just inked a partnership with Comcast.
but, like serving CEOs that that complain about short sellers. Like, how often do they go pretty well? I don't know. Just weird.
What is the short percentage on Palantir?
Dude, this is like, I
think
kind
you're
of-
nuts
here,
to do
can I share
that.
my screen? And
Yeah.
is it application?
Yeah,
I have
of
to share, or is
course.
it just screen?
Of course.
Do I have to share the tab?
You can share the tab.
Is that how you get? Oh, it's right there. Also share.
You can share the tab or you can share the Chrome window.
Oh, is it because of the audio
Yeah.
nuance?
good.
Yeah.
Lines of cocaine and away from these short sellers who like are going short on a truly great American company, not just ours, but just love pulling down great American companies so that they can pay for their coke. And the best thing that could happen to them is we will lead their coke dealers to their homes after they can't pay their bills. That's like one of my. Well, go ahead, do your thing. We'll do our thing.
So
Oh my god.
He's a weird dude, man. Like,
Yeah.
That's mental.
Oh
I
my
just saw
God.
that today, and I was just like,
Oh.
and it's because and he's just like on CNBC talking about like,
It's only what, like 5% short?
I honestly don't know.
What? That's not that bad.
Now the
No.
fair thing is like I
No.
didn't see the setup question, but also like I have a hard time imagining like the setup question like leading to him talking about cocaine. So I don't know.
Yeah.
It is the NBC. Who knows?
Yeah.
Yeah. If it's only 5% short, that's not anything.
Yeah.
I feel like it was the higher short in the past though. I could be wrong.
Oh, in the past.
Yeah.
Bro, Tractor Supply is double the short interest. Like, chill out. You'll be fine.
Hey, like I said, I
So
don't know what
angry.
like the thing could have been like you had a lot of people short in your stock. How do you feel that like they lost? Or, I don't know.
Yeah.
I mean,
Just
yeah. Well, Fabio asked me, he's like, well, you're going against Tractor Supply. I'm like, it just keeps going up though. 10% short.
You know, what company had a lot of short interest.
A lot of people screw up, I guess. So
has a short has a lot of
Had,
short.
I don't
Oh.
think they do anymore. I think they proved the shorts wrong. Led their coke dealers right there.
Carvana. Question mark?
Basically, he's saying I want to kill people on Wall Street, but Let the Coke dealer go to your house when you haven't paid your bills. Good luck kind of life. Musso though. Musso was very heavily shorted for a while.
Oh, okay. Yeah,
It was a fair short thesis because it was I don't want to say binary, but like if they
It's still
couldn't
10%.
sustain,
It's like 10% still.
yeah, because the short thesis is simply like at some point CPG is gonna their CPG margins will go down.
The crowded short that still currently has a lot of short interest. B. Riley.
Well, did you see? Echo says, by the way, do you know who declared bankruptcy today, or who announced their
Fisker.
filing for bankruptcy?
Fisker.
Oh yeah.
Fisker.
Yep.
Fabio
Another
and
one.
that's the company where we did the video where like Marquise Brownlee said this is the worst car I've ever reviewed. And then like they called the dealer that like loaned him the car and were like, did you give him the car? And I'm sorry Dan wasn't all over this. This is like a Dan thing through like an EV company where Marquise Brownlee comes out. It's like
No, I saw that. Yeah, I've never really covered Fisker, so
yeah,
I saw the dealership complaint, or he got called.
Mm-hmm.
He's like, "Did you loan your car to this guy?" They wanted to silence him, basically.
Yeah.
Like,
oh my gosh,
he's a big YouTuber. That's not gonna work.
Yeah, I mean, God, I feel like he has more firepower than they do.
He definitely made more money in the last year.
Oh, he's definitely got more. Yeah.
Well, no, I was even talking like legal firepower, because he has tons of probably not only a legal team but legal like social media insurance as well. So like most likely, like he wouldn't have to worry about anything if he would actually got in a legal battle with them.
That's true.
So
that's the big question though with like Rivian. Like Lucid is not a real company, so it doesn't matter. But Rivian, it's like, can they make it?
Yeah.
Because all these small EVs, same problem. Like none of them make money, right? Outside of Tesla. So the Fiskers of the world, like none of them make sense. They only made sense in a low interest environment. Oh.
This is why I don't think we're in a cloud market like we were in 2021, by the way.
Mm-hmm.
Not
active companies going out of business. There's no free money. No zombie companies.
NFTs.
I mean, like liquidity is still like pretty tight, right? It's not super loose. It does bring in like especially the kind of how the fuel or how the SPY is being fueled to all-time highs and to continuing this trend. It is kind of interesting that like it feels like we're somewhat disconnected a little bit from I wouldn't say like macro, but like certain companies kind of are disconnected from macro in a sense, because you've got like these massive tech companies, like the top 5-10 companies in the SPY that have very, very, very little debt levels, have massive amounts of capital. They have like massive amounts of capital on their balance sheet. They have massive amounts of capital coming in through cash flow, and they're still making massive amounts of capital, right? And then you have like basically a race between them in this specific instance that's fueling like a lot of spend for their expansion, right? It's very, very, very interesting market dynamics. Like the disconnect of what these companies do comparative to like the overall like macroeconomic environment and like small and medium businesses is just like widening like greater and greater and greater. It's pretty fascinating.
I think you're.
No, Fabio, you asked a silly question.
What is going on?
What the heck is BVDs? No, I'm not gonna do that. But
thought he was a bot for a second.
Yeah. But
cool. Well, shoot, do we have anything else? Basically covered everything. I mean, we didn't really dive too deep into DC infrastructure. Kind Capex
Or
cycle
cyber.
or cyber. But we can do that later on.
No.
We can do that later on.
For now, just laugh at all the Sentinel-1 bulls.
Yeah.
This
Sentinel
is
one.
why I bought
Which-
all the cybersecurity companies.
Dan,
But
I mean, yeah.
this is also why we said not to buy one that is an ETF for the top holding, meaning Sentinel-1.
Yes. Yes.
There was one like that.
So I
A
think
lot of
they're all
them.
Probably. Yeah.
Yeah.
It seemed like out of all the ETFs that are like industry focused.
they're all not market cap weighted ETFs. They all have a management team that's like, no, we're gonna select which ones are at the top. And for whatever fucking reason, it seems like all the managers are all like, this is the next CrowdStrike.
Yeah.
Yeah.
Yeah. So
Highest allocation.
yeah, like it was one, Dan, where like I agreed with you. It's just like I was a little too unsure of which one was
A
the
lot of
best.
them go
So-
equal weighted, right?
Yeah.
A lot of them do that. They'll identify the players in that industry,
Yeah.
Mhm.
and then they just equal weight all of them. Which
Andrew, I haven't listened to the Sentinel-1 call or anything like that. I just kind of checked the brief release. But it did cross my mind that if the Sentinel-1 and Palo Alto are actually sharing the same narrative, even though they just came off of beating guidance and beating estimates, but their forward-looking narrative is in line and more bearish. Do you think it's possible that CrowdStrike is just
That much better than
like
them,
they're either that much better than them,
or they're behind them and feeling that?
yes.
I don't know. I really want to see what Sentinel-1 says, because to me, it's very interesting. Because if they say, because they could say something like, and I can, let's see. I'm gonna
But
take 3 minutes here and run through
the
the
big
transcripts.
distinction, I guess, with Palo Alto is Palo Alto, it's more strategic and self-inflicted.
And they're exposed to a lot more.
And they're exposed to an entire different segment of the cyber market that is going to be way more cyclical, which I think that segment is going into a cyclical downturn. And that's firewall spend for anybody that's wondering.
I mean, like
Physical-
Crowd already had
Physical
their
firewall.
Crowd already
not
had their
hardware.
earnings though. Like how many weeks ago?
Yes.
Yeah. So I mean,
It was right after Palo Alto,
yeah.
like
so,
a week after Palo Alto.
Yeah. Winners keep on winning. I respect the spirit of the question, but from a distance, probably not.
We'll see. We'll see. I don't think that they'll be affected as much as Sentinel-1. I could still see them being potentially overly optimistic in their 1 year forward-looking kind of projections or guide.
Oh Jesus! I actually got called out in chat.
no, he's trying to pump a fucking shit coin. So
I mean, or are we talking GMX, the stock being what? Global Mining Enterprises? Question mark.
I don't know. I see it as an altcoin.
Oh, okay.
I seriously doubt we're talking about a freaking Canadian mining stock.
Yeah, because miners can be really difficult.
Yeah, I'll have to listen to the call. I don't know. I have to go through it. There's something like sticking out. Anyways, yeah.
No, I just had that thought. I was like, well, if multiple people are saying one thing and the other person is saying the other thing, are they just who's right? And even though CrowdStrike is the higher quality player, and I think will be affected less from it, are they still being too like overly optimistic? Or like, are they really really that sure in their 1 year pipeline? But yeah, I don't know.
Winners keep on winning.
Yep. I really hope Palo Alto starts reporting different KPIs as they go through this. Because I don't think they really have any set reporting KPIs that would really identify the wins that they're getting or the cross sell that they're getting. You know, if they're not actually charging for it right now, like product use. So, all right. With that, any more questions in the chat? Any more questions? Thank you guys for a record monetization live stream.
Live.
I made more from YouTube in an hour and 45 minutes in the last hour and 45 minutes than I have since I got monetized. So cool. And panelists, I don't know, your cut will be coming somehow.
Let's rain.
I'll be expecting a check in the mail.
It's like one of those like bank checks that you get when you close an account, and it's like 0.01 cent.
Yeah.
You're like, great.
I don't that's like, you didn't have to do this. It's just a waste of a stamp, but okay.
I know, yeah, right. All right, guys, with that, thank you all for joining. I hope you enjoyed the live stream. Thank you all the panelists for joining. It was fun. And yeah, we will catch you guys later.